looking at the movers and shakers here, what Mark has provided for the conversation today are the aggregates across the different asset classes. CVOL has a variety of measures that will go deeply into the benchmark products, but there are also aggregates that exist across the Treasury, the ags, the FX, and the metals, and overall the commodities. The biggest change on the week we have is the Treasury market. Now, again, we're looking at the CVOL. That's the main sort of at-the-money volatility measure, right? So we had an increase of almost 4% there, with a trend showing that a mixed trend. When you look at the tool, you're going to see some red and green bars next to the change value. So that's going to show you how the market has moved over the last 5 days. So what you see prior to this almost 4% increase, we had a couple down days, an up day, and then a down day previous to that. So generally down in volatility over the course of the last week. And as you look at the tool as well, there's a range indicator over that period of time. We're at near the high end of the range for the week as well. So 121 and a quarter with a range from 117 to 123 and a half roughly. So we start out with the treasuries. The ags are next with a slight, almost 5/8 percentage point increase. So not much going on there. Mixed trend as well. 3 up days, 2 down days. The FX is next in third place. And this one again is, we'll call it a 1/4%, a little bit better increase. So I'm going to call that flat. It's also been mixed, been up the last 2 days, but down 3 days prior to that. And then the next 3, there's 2 treasury measures in there, right? When you do look at the aggregates, one is based on price fall. The other one is based on basis point volatility. You'll have to differentiate between those 2. So we'll skip to the metals. Metals is pretty flat, mostly down this week with a little uptick. And then the commodities overall, which is going to be the aggregate across all the different products that CME offers there, is pretty much flat today. Low end of the range for the week, and the first little uptick that we've seen in the week. So again, CVOL, lots of different products to measure there, all kinds of historical data available, as well as real-time tool. I think it's still presented for free off the website, so you can see as the market moves, you can see what CVOL is doing. And the nice part about that tool, so a lot of these volatility tools that are aggregates of this sort, they'll just show the volatility measure. One thing, I will have Bantix take credit for this. One thing that we did as part of it, and the CVOL pump itself doesn't have the actual underlying future associated with that particular calculation. What we've done is we've married that into the chart, because when I see a volatility chart, I want to see what's happening in the underlying as well. It's going to give me a lot more information than just seeing that number. If I see a big spike up, is that because there's a huge break, or is that because there's an unexpected rally? So those are the numbers. That is a good tool, as Mark said. I think you're going to see a lot more stuff with CVOL as the years go on. And I'm excited about it, because the natural progression for something like this is to have a future associated with it, and then also options on each.